Welcome to Tea at Taxevity, where you get insights from insiders who make life better, our many clients and friends. I'm Pramod Sharma, the actuary at the Taxevity Insurance Advisory. Today we're looking at online insurance distribution, the future. Our guest is Kevin Pledge. Welcome, Kevin. When you're not being interviewed, what do you do?
I'm an actuary, and I've always been interested in technology and marketing. So that's why I'm now looking at working on online insurance.
Yes, and you're the first actuary we've had on the program as a guest, so that's a milestone.
Well, thank you.
Okay, let's start by talking about online insurance distribution. Is any taking place right now?
We from a historical point of view, we've seen it a lot in the UK. We've got Beagle Street, which is, to my knowledge, the first online-only insurance company. We've had LV, the old Liverpool Victoria, rebranded to LV. They sell online. And we're seeing a lot of other companies. They're two of the ones that we've been involved in. So a lot of sales in the UK are through online aggregators offering term insurance, which gets executed online. In North America, it's been very slow to take that up. We just launched Teacher's Life, which is selling online from quote, underwriting, all the way to purchase. So you click and you buy and you're on risk.
Okay.
So I think we've got the first one in North America just launched. Of course, that's not to be confused with simplified issue, where you can buy online but you're not really underwritten, or some which is a partially simplified to take some of the risks.
Yeah, it's terrific that with Teacher's Life you've got the full solution there, because that's quite an innovation. I think you were saying that the whole process takes, 12 minutes typically?
12 minutes on average.
Mm-hmm.
Someone goes through cleanly could probably do it in about 7 or 8 minutes. And some people, when we generate reflective questions, so you go through, you might be asked, answer one question, yes, I have this family history of a medical condition, then we generate more questions. So more questions get generated. So for some people it will be 15 minutes or longer.
Mm-hmm.
And some people may stop partway through, save it partway through and come back and complete later. But on average, we're seeing 12 minutes.
Okay. What sort of products are being sold online?
Right now, we're selling pure risk term insurance, any term from 10 to 30 years. We're introducing critical illness, and we can also do disability.
When consumers are buying online, what happens to advisors?
Well, at Teacher's Life, the advisors are in-house, so if someone needs advice, they will talk to an advisor. They will be referred to the advisor. Other companies will have a model whereby the advisors will have the role for other products, in products that involve perhaps estate planning or something like that. So we're really targeting the middle market, the average consumer, someone who might be earning up to $150,000 a year as a family unit. So that it's really aiming at the average consumer, not the high wealth individuals.
And is that market well served right now?
There's definitely a gap right now. In Canada, Swiss Re estimate a $1 trillion gap in insurance needs. In the US, it's about 20 trillion. So there's a huge gap.
Really? It's that big?
Yes, it's huge. And it's a number of factors that lead to that, and hopefully we're filling one of them.
Okay, it looks like in the UK people are ready to buy online, and they have been buying online. What about Canada and the US?
Yeah, we're seeing every indicator that Canada and US is ready to buy online. We're seeing a lot of Google searches, and I segmented the Google searches from the data they provide between people that are really willing to buy, searching for buy term life insurance, terms like that.
Okay.
And then the second category of looking for a quote, and then just general information. And we're seeing around 250,000 quotes a month, search terms a month, sorry, where people are looking to actually buy and transact insurance. So
okay, the 250,000 search terms, is that in the Canada or the US or a combination of both?
That's through North America, it's both.
Okay, that shows that people are looking, and there won't be much that they can find.
Yeah, definitely, and in a market where it is hard, it's not generally known that you buy it online. So people are looking to buy online even though it's not really available.
Now, the message would probably have to be different online than when dealing with an actual advisor. What are the sorts of differences?
Well, when you're dealing with the advisor, I guess the first difference is the advisor in many regards is the client to the insurance company.
Yes.
So the products are designed differently. With insurance companies dealing directly online are very much focused on who is their client and putting together a much clearer message. So the products need to be simple, the language needs to be simple, and basically allow people to execute it easily.
Right, because there's terminology that's used. For instance, we love talking about sum insureds and face amounts, but consumers may be more comfortable with the word death benefit.
Yeah, and that's one thing that we've looked at and we try to simplify, and I'm sure a lot of companies through traditional methods have tried to simplify it. The advantage of being online is that you can make those changes a lot simpler. You're not dealing with a culture change. So if you want to change the word from premium to price, you can make that change and it's changed. Whereas if you're doing it through an advisor, you're going to be looking at a cultural change and objections to that. So I think the challenge of terminology is universal, but it's also one that we can address easier and quicker.
Mm-hmm. Now, you were telling me that there are two different patterns of buyers. There are divers and dippers. Would you mind explaining those two?
Yeah, the experience we've seen is that some people just go in and want to buy. They want to execute, they know what they want, and you give them the simplest path to purchase. They're the divers. And other people want to look and educate and become more informed about the products available, and they're the dippers. So we have the dippers and divers, and when you design your marketing path, your customer journey, as we refer to it as, you need to accommodate both types of consumer.
Okay, and I find that just from my own experience that does make a lot of sense. There's certain times I just want to do research, and then there's the day that, okay, I'm ready to buy, and I just want that buy button.
Yeah, absolutely. And,
which sort of companies would benefit the most from offering products online?
Right now we're seeing many of the smaller companies really feeling the pressure from advisors, or rather the lack of advisors. The big companies are often doubling down on the advisors, offering more incentives to attract the advisors to work for them, and the smaller companies are really struggling to get advisors. The average age of the advisor in North America is 57, and they're not getting any younger. The supply of advisors isn't going to take off any day soon. So the companies right now that are really taking online seriously are typically the medium, smaller companies. Also some of the companies that sell to particular affinity groups like the fraternals. So they can reach more directly into their market with an online offering than you can often through an advisor.
And it's probably more cost effective, and there's probably a higher level of consistency also.
Oh, definitely, it's much more cost effective, and you can tailor the products to meet your particular market.
When you talk about affinity groups, can you give us an example of what that means?
There's a lot of affinity groups sold right through the big insurance companies, and there's also the fraternals like Teachers Life, and there's many others. And so Teachers Life only sells to teachers or members of the education community.
Okay.
University professors, people who work at schools. And so they're tailoring the product that they're selling very much to that marketplace. And in the case of the fraternals, any profits they make goes back into the fraternal activity that they support. So Teachers Life, their money goes back into the education community.
Okay, and these are organizations that consumers may not be thinking of when they are thinking of insurance, because they probably don't have the big billboards or the TV ads.
That's very true, and reaching out to consumers is still a challenge, but the internet is certainly leveling the playing field. And I think when a consumer who fits into that market says, okay, I have a choice between big company A that I hear about in the news and one that is targeting my particular group, my affinity, who do I choose? If I'm a teacher, who would I go with? And I think most of the time, I think it's quite obvious we'd see a lot more desire to buy from the group that you believe in.
Okay, should advisors feel threatened by this shift to online?
I don't think so. Part of the drive is the lack of advisors.
Okay.
So advisors are still needed at the higher end, higher wealth individuals, inheritance and estate planning, and other areas where you've got composite products. We're really targeting the huge gap that exists today. The $1 trillion, as I mentioned, in Canada, 20 trillion in the US for just pure risk insurance, where someone wants to come along and buy buy just a pure risk term insurance for a period of time. If I die, I want to know my family is taken care of. If I become disabled, I want to be covered. Or if I suffer from a critical illness, I want to pay out, perhaps in Canada because you want to get treatment quickly in the US, or in the US because you're not insured. So those are the key products that we really see.
Yeah, because I've been concerned about this whole issue of people not having enough insurance. So I'm really glad that there are new options being introduced. Because in my case, I deal with individuals who would maybe not be well suited to buying online, or have bought online and are looking for more attention or other kinds of situations. So I think the two are quite complementary.
And in some cases, you might be working with a high wealth individual, or someone who owns a business and has a fairly complex scenario, but they may have a relative or a friend who they say, oh, can you talk to this person? And they're going to be a very simple case that just wants $150,000 of term insurance, or the other more common scenario that we see in the market is someone wants to buy some life insurance and it's within this range and they want to pay $20 or $30 a month. So we look at offering both driven by the sum assured or driven by the premium that someone wants to pay.
Okay, so if someone has in mind that there's a certain dollar amount they're willing to spend, then you can do calculations to figure out how much insurance that would provide.
Yeah, we work both ways. I think I think traditionally before computer quotes, agents would often go around with their rate books and they would do the calculation both ways. They would say, oh, you want to pay $20 a month, this is what you get. And I think a lot of that went away with computer-based quotes where you'd say how much you need. This traditional sales process now involves an agent who will give an advice that might say you need this amount of insurance to cover your family completely. And I think really we're looking at that being a little intimidating. I think a lot of people want to say, okay, I need a range of options. What if I die today, my family gets the bare minimum, covers for the next year, but my wife will go back to work scenario. Or they're taken care of for 10 years, or they're taken care of until my children are grown up. So when we do the needs analysis, we basically present those three ranges, the sum assured and the premium, and within that range it's up to someone to make their own judgment as to what they feel they can afford at this particular time, or how much where they sit in that desire to be completely covered.
Yeah, that looks like a really good approach, showing people different options. Because sometimes when they're sitting down with an advisor, the advisor has prepared a printed quote or doesn't necessarily have the ability to show them a lot of different options.
Yeah. So, and there are differences, other differences in the process. But the ability to change and think how much do I really need and look at it from the premium. We always give the best premium for the sum assured rather than because there could be more than one solution, so we've got different premium bands, so we work from the higher premium band and give the best solution, and you can see what happens if I paid another $2 premium or $4. So we give those ranges so people might step over a premium band and see a better option. So we do that. And then the other big change in the process with an agent is they will complete an application form that will go into the office. The office may want more questions asked, follow-up medical questions, blood, stuff like that. So the agent's really given an indicative quote, starting the conversation. They come back and say, oh, we can't insure you for everything you want. You might have not be covered for this or that. So our process is fundamentally different. You're online. It could work with an agent helping someone do it, but you're making that. You've got an indicative quote, you answer the questions, and then you're clicking to buy, and that decision's done. You're on risk from that moment forward, and that's a big difference to the consumer.
Right, and another difference is that when you're sitting with an advisor, then maybe there's more pressure to do something at that point, which has both pros and cons. Online, that pressure is gone. The
pressure's gone, and as a result, we're seeing much better persistency online, so lower lapse rates.
Oh, you're seeing that?
We've seen that in the UK. It's still too early to show that elsewhere, but that's definitely been the experience in the UK.
Okay, and when the lapse rates are lower, is that an indication that the clients are buying the right things?
I think so.
Is there a key message you'd like to leave with our viewers?
I think this is just the start of something big. We're seeing one company do it, and it's looking very successful right now. We're seeing these changes elsewhere in the world, so I think we're going to see a change in the industry. We might see threats from outsiders if existing insurance companies don't change, and I think we'll see a lot more online distribution of insurance. Certainly, the products that we're offering.
Okay. Well, thanks for coming by and informing us.
Thank you very much.
Thanks for joining us for Tea at Taxevity. The Taxevity Insurance Advisory helps you understand insurance and bridges gaps in your coverage. There's no premium for peace of mind. How healthy is your insurance?